Today we're going to talk about the Florida housing market. Are the prices really crashing? What the heck is going on? A lot of negativity when it comes to headlines floating around here. We're going to look at data first. And for that, I'm going to tap into Substack, which I have access to as a real estate agent. We're going to start off by looking at Florida as a whole, and then I'm going to compare that data to Sarasota County, where I live in, because looking at local information is also very important, and so we're going to look at that comparison. Now, as of August 2025, the median price is $410,000 for a single family home, and that's actually down by minus 0.4%. So when it comes to percentage changes, it really started to trend down versus the same time last year since March of 2025. Now, the percentage changes, I wouldn't call it very drastic. It certainly is much more of a correction, not a crash, especially considering that the prices have shot up quite a lot over the last 4 years. In some locations, it could have been up by over 50%. Some areas in Florida may do far worse, and some actually may be doing better when it comes to the median price and the trend. And this is where local information is very important. Now, looking at months of supply in a balanced market, you typically would want to have anywhere from 4 to about 6 months of supply here in Florida. If we look at August 2025, months of supply is now about 5.3 months of supply. So it's starting to tilt towards much more of a buyer's market. If we go back to, say, January 2014, and then a few months after that, you know, the months of supply is very much in line with where it is at right now. And back in the day, so back in 2014, prices were still going up. Now, what we're seeing here is that the months of supply since about June to July and August has actually come down. And it's not because we have more sales, but it's because we have less listings coming on the market. And I think what's happening here is that a lot of sellers are starting to see that when it comes to timing the market and them wanting to get the prices from 2 or 3 years ago, they've already missed that time frame, because many different areas here in Florida, the prices are coming down, and it's also taking much longer to sell a home, and so they are not listing as much anymore. Now, closed sales, as you can see here, is actually trending down versus same time last year. So the months of supply trending downward as well is due to the fact that we don't have as many new listings, and you can clearly see it from this chart here. As of August 2025, for example, new listings to the market is down by almost minus 8%. The story for the condo market is very different from the single family home market, and I have plenty of videos that talk about condos and the Surfside bill, so I'm not going to get into that specifically. But looking at this data here, and this is for townhouses and condos, most of the data that drives this section here is going to be condos. As of August 2025, the median sales price is $290,000, so it's more affordable to purchase a condo in Florida, especially if you're somebody that's trying to get into the Florida market. You don't want to spend an arm and a leg on a home. Perhaps it's a second home. Condos have always been a great opportunity prior to the Surfside bill, though I do believe when it comes to understanding how the Surfside bill really works and what buildings are actually truly affected, which is 3 stories and higher and older, then it opens up good opportunities if you're doing an investigative job on the condo that you're looking to purchase. I think now is an opportunity for many to take advantage of the fact that the condo market is truly hurting, and we can actually see it in the percentage change. So as of August, it was down by almost minus 7%. So the percentage change is far more drastic than in the single family home category. If you go to places such as Sarasota, we've seen changes in the double digits actually, and the same holds true in other pockets across Florida. So this minus 6.5% could be way worse in certain places in Florida. Just know that. Now we're going to pivot. We're going to look at Sarasota County data to kind of compare it to the Florida data. You have to look at Florida to kind of understand what's going on average, and then compare the local data. And that's going to give you a better idea of where the advantages are, or maybe the disadvantages of purchasing in that local place. Looking at Sarasota County, the median sales price is now $475,000. This is for a single family home, and that's actually a percentage change of 0. Now, Earlier in the year, June, May, April, we've seen far more drastic changes. Some of it is due to the fact that we have a lot of new construction that's happening, especially east of Highway 75, and that is really taken away from the opportunity of someone selling an existing home unless the existing home is well priced or shows really nicely, has been updated. Those are the ones that are sitting on the market much more. And builders, especially as of the last year, they've been running a lot of incentives. And so buyers coming in, they know that purchasing a new construction home will probably provide them with better rates on average when it comes to homeowners insurance costs. Also, the home is brand new. It comes with, all sorts of warranties. So if it's in a location that they're already interested in and they're getting a lot of incentives, whether it's a price incentive or perhaps it's a financing incentive, it's taken away from existing listings. Also, what you're seeing in this data here is that percentage changes is starting to equalize somewhat. And that could allude to the fact that perhaps the correction here in Sarasota County is already done and over with. We'll have to see what the later months will tell us, but it's certainly a possibility. Now, months of supply, it is 5.2 months of supply, and that's a percentage change of 13% versus same time last year. It's taken, again, much longer to sell. On average, a home could take about 90 days to go pending, and there may not be anything wrong with the home. Perhaps it was initially priced a little bit too high. Of course, if the home is priced well from the beginning, it'll go pending faster, especially if it shows really nicely and has had some really nice updates that today's buyers are wanting, such as a newer roof, updates inside of the house. But 90 days is really what we're seeing on average and shouldn't deter any buyer from considering a home. As a matter of fact, even a home that's been pending over 100 days, not a red flag. I would say over 200 days, then certainly it is a stubborn seller that's not willing to lower the price. And so what we're also seeing then is a lot of sellers that are pulling off the listings from the market. Now look at this. This is really interesting. As of August 2025, new pending sales have been up by almost 43%. A lot of this has to do with the fact that the mortgage interest rates actually started dipping back down again in August. Perhaps at that point, buyers had a better idea of gauging where the economy was at, understanding what the administration's tactics are, and so many of them came off the fence and really started gobbling things up. Let's look at some of the major news headlines that we're seeing right now on the internet, because it's going to be really telling as to what is potentially happening in the Florida market. This is from floridatrend.com. Here it is. Major red hot Florida metros are now buyers market. We've seen that just by the months of supply and how that's increased over the last few years. The housing market in Florida, once known for its red hot sellers market, is now experiencing a shift towards a buyer's market, with major metros such as Miami, Orlando, Jacksonville, and Tampa moving into buyer-friendly territory. And so if you're somebody that's been looking to purchase in the Florida market and the time is right for you now, you'll have way more opportunities than you would have 3 years ago. First of all, the prices are softening in general, but also you have so much more supply to choose from and plenty of more time to make an educated decision. 3 years ago, if you didn't make a decision maybe in 2 or 3 days, that home that you were interested in probably would have gone pending with multiple offer situations. That is not going to be the scenario in most cases. FloridaRealtors.org, they disseminated their August Florida housing report, and the big headline here is mortgage rates drop and buyers surge. And we've seen that just by looking at the Sarasota County data. So of course, everybody's trying to figure out what is going to happen in 2026 and will prices continue to go down? Well, nobody has a crystal ball. It would be great if we all did, because then you'd be able to perfectly time the market. And that's always been kind of a challenge, right? Just timing it correctly. And I think, you just want to make sure that the time is right for you and you can actually afford purchasing a home, especially if you intend to live in that home for a longer period of time, because if prices do come down, you can kind of ride that wave out until prices are back up again, because it'll just be a matter of time until prices are higher than they are today. But what could actually potentially negatively affect the housing market in 2026? Well, first off, let's talk about inflation. If inflation gets worse, certainly what will happen, especially with new construction homes, prices are likely to go up because it's going to cost builders more money to build a home, and typically they like to keep their margins where it's at, so they'll pass on the prices to the consumer. Since the crash of 2008, builders really learned how to better understand what's going on with the market and to time it better, because they took a big beating back in the days. And so my anticipation is that if they're not selling as much in terms of unit sales, they're just not going to build as fast, because the last thing they would want is to be sitting on all the supply and not be able to sell. But the key takeaway here is when it comes to builders and tariffs, prices are probably going to go up. If new construction homes tend to go up in prices, then more buyers will probably be interested in existing homes. So we'll have to see if that increased pressure will increase the prices of existing homes, because now all of a sudden there's more demand. Now, migration numbers to Florida is one that we're really going to have to watch, because if the migration to Florida drops off drastically in the next few years, then that's going to have a negative impact on the prices. For sellers, not so good. For you buyers, that would be great. Looking at a Newsweek article here, the net migration of people moving to Florida from other American states has fallen sharply from 317,000 in 2022, so this was really at the height of COVID, to just 63,000 in December of 2024, so last December. However, the Sunshine State still saw its population surge by 467,000 from 2023 to 2024, according to estimates, primarily due to the inflow of 411,000 international migrants. I have a feeling that that number is going to go down quite a bit. Question is, how many of these international migrants actually are purchasing or have purchased homes in the past? We'll have to see till we understand what the migration trends actually mean for the housing market, but just watch it. Now, the mortgage interest rate has a huge effect on demand for homes. We've seen that just in August, when the mortgage interest rate for the 30-year fixed actually dropped. The Fed just recently met and they passed a 0.25 basis point drop in the interest rate. We have not seen, though, a mortgage interest rate drop since the passage of the interest rate drop. To a lot of you, that's surprising, because you're thinking, okay, if they're dropping the interest rate, then that's going to have a same effect on the mortgage rates, and that's not true. The mortgage rates, it tracks the 10-year Treasury note. And that's what you really should follow in order to understand or determine if the mortgage interest rates are likely to come down. And so if mortgage interest rates drop into 2026, that's going to unlock a lot of buyers and potentially put pressure on prices again. Now, some of you may say, okay, well, that's also going to enable sellers to actually list their home. Perhaps some of them are just waiting for the mortgage interest rates to drop because of the lock-in effect, right? Because they're kind of locked in at a much lower mortgage interest rate right now. And so if they were to sell and rebuy higher, it probably wouldn't financially make sense for them. But if the mortgage interest rates dropped so that they could actually sell and rebuy much closer to the rate that they currently have, it makes it much more interesting to them. Well, that could have been the case in August, right? And that could have been the case last year when the mortgage interest rates came down. But what we've seen instead when that happens is there is more pressure being put on prices, because there's way more buyers coming out versus sellers selling. You know, the homeowners insurance crisis is real, but there's a lot of misinformation when it comes to homeowners insurance. And so I feel that some buyers who are tapping into the news and are seeing this from kind of out of state, they may be driven to consider other places they may have not considered before, such as Georgia or South or North Carolina, when in fact there's ways to keeping the homeowners insurance costs down by moving further away from the coast into an X zone, which is the preferred flood zone to live in Florida, perhaps into a new construction home or an existing home that has a new roof and high impact windows and sliders or protection. But then you're seeing headlines like this: the projected annual cost of homeowners insurance will hit $15,000 in 2025. Well, some of you who are trying to escape maybe New York for tax benefits, then you're seeing this and you're like, well, it may not make sense for me to leave New York to come to Florida if that's what I'm going to be expected to pay. And that's not going to always be the case. A lot of these homes that have high homeowners insurance costs or flood insurance that you can't even get were homes that are either in an AE flood zone that have perhaps been flooded last year. So insurance carriers are no longer wanting to insure these types of homes. So there's a reason and a location and a type of home that is going to be much harder to get insurance for. Most economists do not predict a price crash in Florida, more so a price correction. And so if you want to be able to better predict what could happen in the Florida housing market in 2026, follow those key points we've discussed, because they do weigh into the supply and demand aspect here in the housing market. Also see what's going on geopolitically, economically speaking. And I think when it comes to consumer confidence, that is going to be a huge one to watch as well, because if consumers are more confident in terms of where we headed with this administration, all the tactics being put into place, then they're more likely to actually purchase homes. If the reverse is true, it's more likely they're going to sit on the fence and kind of wait and see where things are at. So I hope this discussion helped you. Thank you so much for watching today, for stopping in. I appreciate you guys. Have a great day. Take care.